Hey everyone, this is Corey with Sims Investment Management. This is another monthly market update. And the market in June continued to have a lot of negative volatility. And we actually saw a down 15% quarter for the first time in a very, very long time outside of COVID. The good news is, historically speaking, when we've had such a negative quarter like we did in the second quarter of this year, the positive trend for the next quarter, 6 months, and year is almost a perfect 100% of it's been positive the next quarter, 6 months, and next year. So there's a really good chart. There's only, I think, one instance out of all of the past 9 instances since World War II that hasn't happened. So I'm not saying that the market has bottomed. There's still uncertainty, as there's always going to be. But certainly, historically speaking, things are in our favor. Earnings season's getting ready to kick off for the third quarter, which is always a fun time. The first 2 months of the quarter, in any given quarter, includes the majority of the earnings season. But we do get a couple late quarter earnings that we got to see at the end of June, Nike being one in particular. And I thought Nike's earnings call was actually very encouraging. They talked about how shipment costs for their products have come down significantly from the peak. They talked about how the consumer spending habits, they're not seeing a weakening consumer, at least through the end of May, which gives me a lot of confidence that, again, we're not going into a recession like a lot of folks have predicted. I think there's a lot of political posturing right now when you hear recession. Already people are trying to add asterisks and caveats. What isn't a recession? What isn't? Why this time's different, etc. But when you have the labor market as strong as it is right now, it's very, very hard to argue that we are going into a recession. Inflation stinks and it's high, but we know the playbook of how to break it, and it's not something that's going to turn on a dime, similar to it didn't turn on a dime. It took several months to ramp up to where it is right now. I'm going to include a really great resource called What a Time to Be Alive. I think this is a wonderful perspective that we all need, especially now. The main point that I took away from it is a lot of the things that we worry about in America in today's world is a privilege, right? And even just as little as 50 to 100 years ago, we didn't have the privilege to even worry about the things that we worry about today because we were too concerned with trying to stay healthy, find food, find shelter, and genuinely just try and survive to be alive. So I thought it was a really, really great piece and very fitting for what we need to hear right now. I'm going to shift gears a little bit and talk about I-bonds. We continue to get questions about I-bonds a lot. If you haven't heard I-bonds and the people that think it's the greatest thing since sliced bread, a little bit of background on them. They are inflation-protected bonds. They are sold directly through the U.S. Treasury. We cannot buy these I-bonds for you. You would go directly to the treasurydirect.gov website, and each person can buy up to $10,000 of I-bonds if they elected to. The reason why people are going gaga over them right now are they're paying about a 9 to 9.5% yield. And if we dissect that a little bit, a lot of people think that's a wonderful investment opportunity. But if inflation's at 8.5%, and if you're getting 9.5% on a bond, your real return is 1%. So these bonds are not designed to generate wealth. They're just designed to keep up with inflation. And they are going to reset that interest rate every 6 months. So historically speaking, inflation I-bonds have paid close to around 3%, which is what inflation has been. If in 6 months inflation's come down to 6, those bond yields are going to drop. If it then goes down to 4 and gets down to 3 and 2, you're going to see those yields drop. If you have to redeem those I-bonds within the first year, you lose all your interest. If you have to redeem them in the first 5 years, you're going to lose 1/4 of interest. So there's a lot of caveats. They're not this greatest thing under the sun that's just been invented. If you are sitting on cash that you are just absolutely unwilling to put in the market, then I bonds can be a decent place to park 10,000 of that cash. But I would stretch you and argue to say, why go buy something that's paying 9 to 9.5% when we could instead go buy some really, really sound companies that might be off 20 or 25% right now, that not only have a chance to grow their earnings and grow their profits over time, they're going to beat inflation over the long run and generate wealth, not just keep you up with inflation and purchasing power. An analogy there that I would like to say is, a lot of times when people think about bonds, they think they're really safe and secure. We've seen why the past 2 years. When rates rise, bond prices come down. And I just would ask people to ask the question, would you rather own Apple, the company, or would you rather own the bank that's lending the bonds to Apple to grow? Right? Would you rather own a small business, or would you rather loan money back to that small business that you're going to get in return? Most people would rather be an owner of the company than just the loaner that's going to get their money back plus a little bit of interest, because all the future upside goes to the owner of the companies, not the owner of the loans. So just something to think about there. That's it for this month. I am going to leave with, I saw a really interesting tidbit. Again, something that this world, we have way too much negativity. Ringo Starr turned 82 years old last week. I think that's amazing. And I did not know this, but Ringo battled health issues, major health issues. He was left for dead basically at a very young age, and spent years in the hospital up until he was age 8. To the point that he was illiterate at the age of 8, and he became, within 10 years later, as a teenage superstar, part of the Beatles. And it just goes to show you that no matter what we're going through, whether it's now with the negative headlines or the very difficult circumstances that many of us has faced in the past, that positivity, a good outlook and perseverance has certainly progressed us forward in the past. That's it for this month. I hope it's helpful. Send along to anybody that might need to see it, and we'll see you next time. Thanks.